The final day of the trading week coincides with the final day of the quarter. It's going to be volatile on Wall Street. Quiet intraday trading after the release of the PCE price index aroused cautious optimism. US stocks went up on Thursday, and the growth was driven by high-tech stocks. At the same time, shares of the US banks fell because Biden's administration suggested tighter measures to curb risks. The Dow Jones climbed by 141 points, or 0.43%. The Nasdaq added 87 points, or 0.73%. The S&P 500 rose by 0.57% to close at 4,050 points. The benchmark stock indexes traded quietly in the New York pre-market as investors wanted to play safe ahead of the macroeconomic data. After the PCE price index was released, the three Wall Street indexes began a rally, and the S&P 500 is expected to trade in the intraday corridor between 4,010 and 4,130 points. The major stock indexes traded moderately higher yesterday. High-tech shares rose by 1.1%, driving strong performance of the S&P 500. Shares of regional banks went down, and the SAP index declined by 2%. The financial component of the S&P 500 slipped by 0.3% and was the only sector to close in the red. One day before the end of the first quarter, the high-tech sector surged by almost 20%. The telecom sector jumped roughly by 18%. The Nasdaq is on a track to its largest quarterly growth since late 2020, and the Dow Jones is closing with losses. The S&P 500 grew by nearly 6% in the first quarter. Shares of high-tech giants, including Meta, Apple, Netflix, and Alphabet, skyrocketed by a record 33% amid the boom of new artificial intelligence apps. The U.S. Labor Department reported yesterday that unemployment claims grew more than expected last week. It indicates that the labor market is cooling down. Besides, the U.S. GDP expanded by 2.6% in the fourth quarter, a bit softer than the 2.7% growth in the second estimate. It might assure the U.S. Fed to moderate its monetary tightening. Yesterday, three Fed's policymakers made their comments opening the door for further rate hikes. Two of them said that turbulence in the banking sector might create headwinds for the U.S. economy, and Fed funds futures now indicate a 60% chance of a rate hike by 25 basis points at the Fed's policy meeting in May. Alibaba Group holding shares listed in the U.S. increased by 3.5% in the light of the news. The company's logistics division is getting ready for the IPO in Hong Kong. JD.com shares jumped by 7.8% as the company plans to create a separate real estate division. The core PCE, excluding volatile food and energy prices, rose by 0.3% in months in February, following a 0.5% decline in January. The consensus was 0.4%. The annual PCE, which is the Fed's preferable barometer, increased by 4.6%, the weakest growth in the last 15 months and below the expected 4.7% growth. These readings could signal easing inflationary pressure. U.S. personal spending grew by 0.2% in months in February, much lower than a sharp 2% increase in January. This score is a downtick lower than the forecast of 0.3%. At the same time, personal income slipped from a month ago, though less than expected. U.S. personal income climbed by 0.3% versus the 0.2% growth expected following a 0.6% increase in January. The income growth was driven by bigger government benefits and rising wages in the public and services sectors. The fresh data reveals waning inflationary pressure, so investors are speculating on whether such evidence is enough for the US Fed to make a pause. On the plus side, the data is better than expected. On the minus side, it's still way below the Fed's target. Some Fed officials acknowledged that the bank woes could deal a blow to the broader economy. An increase in unemployment claims also raised hopes that the cycle of monetary tightening is coming to an end. Apart from the PCE data, market sentiment could be sensitive to the Consumer Sentiment Index by the University of Michigan. Eventually, New York Fed President John Williams and member of the Fed Board of Governors Lisa Cook are due to speak tonight. Trading in the currency market is subdued. The US dollar perked up against major currencies but lost its footing again. Having climbed by 0.25%, the US dollar index opened the New York trade at 102.30 points. The intraday carry for the index is seen between 101.70 and 102.70 points. The US dollar could gain ground following the inflation data for the Eurozone. Consumer prices in the European Union accelerated by 6.9% in March on year, much slower than the 8.5% growth in February. It's the sharpest slowdown in inflation since Eurostat launched such surveys in 1991. The greenback lacks luster compared to the euro. The US dollar index is expected to lose about 2.7% this month. It could fall by 1.1% in the first quarter. Such a quarterly dynamic is the weakest start of the year since 2018. The US dollar advanced in mid-March because investors were spooked by the looming bank crisis and decided to flock to the safe haven assets. Now such fears are waning. Despite the Fed's hawkish rhetoric, markets believe that the pause in the cycle of rate hikes, and this scenario is assessed at 40%. Such prospects are bearish for the US dollar, though today it could find support from the Fed's policymakers. The Canadian dollar pulled back from earlier highs. The USD CAD pair traded steadily at about 1.3540 or 0.18% up. The currency pair is expected to trade in the intraday corridor between 1.3480 and 1.3610. Traders got to narrate hot data on Canada's economic growth. Canada's economy expanded by 0.5% in months in January after a 0.1% downtick in December. The consensus suggested a 0.3% increase. 17 from 20 sectors logged expansion, and the accommodation and the food services made the main contribution. According to the flash estimates, Canada's GDP could have grown by 0.3% in February. Oil prices traded with minor fluctuations on a Friday, and the Brent crude futures have jumped by almost 6% this week. They inched up by 0.2% today to trade at $79.45 a barrel. WTI gained 0.7% to trade at $74.89. The American trade has surged by 8% this week. Despite the confident rally at the end of March, both contracts could finish the month with a 5% and 3% fall, respectively. Early in March, they sank to the lowest level since 2021. Bitcoin shed 0.8% intraday and fell to $27,900. However, after the PCE price index, the token clicked into GR. The asset added nearly 1% to trade at $28,500. Popular altcoins also gained from 0.1 to 5.9% in the pre-market. As for the news on the crypto industry, a US prosecutor delivered a verdict on Do Kwon, co-founder of Terraform Labs and developer of stablecoins Terra USD and Luna. He is charged with a securities fraud, shady transactions, and scams. Last month, the US Securities and Exchange Commission filed a lawsuit against Do Kwon, saying that perpetrated a fraudulent scheme that led to the loss of at least $40 billion of market value. To sum up Bitcoin's results of the month, it has displayed amazing performance. The token has rallied by 70% since early January, and now it's trading at about $28,000. Analysts suggest polar opposite forecasts for the flagship crypto, and the worst forecast foresees a slump to $13,000. The most optimistic one suggests a rally to $1 million. If the price stops resistance of 28,950, it could climb to 29,200 and even to $30,700. Alternatively, if Bitcoin comes under selling pressure, the price could find support at $27,600 and $26,600. This is the view of InstaForex analysts on the end of the trading week in the United States. Our team wishes you a profitable trading week and a nice weekend. Trade easy with the InstaForex and see you online on Monday. Good luck in your trading.